All right, welcome back to another episode of me working my ass off every single day, diving my nose into these charts every single day until I find a trading strategy that makes me millions and millions of dollars. And in today's episode, I'm going to be reviewing some observations that I made today, some hypothetical trade scenarios that I probably would have taken had I been in a demo trading environment, but I still need to learn how does the market move. I still need to study price action. I still need to understand how this thing works before I even consider demo trading. So right now, touched on this in yesterday's video, but this is what I'm doing right now. I'm just recording observations. I'm not pushing any buttons because the second you start pushing buttons and taking trades, even in demo, that's when emotions get involved. So I'm completely leaving the emotions out of the equation so I can strictly focus on what is price telling me. And that is the entire objective behind this. But I can still see that I'm statistically improving by recording all this data. So here's what I'm measuring. Basically, I'm measuring how many observations I get right, how many do I get wrong. And over time, I'm going to see that I get more right than I get wrong, and then I can finally go into demo trading. Once I have I would say maybe 50 to 60% win rate consistently in the observations that I record, then I'm going to start going into demo trading, not even trading with live money. So, but before then, until I get there, emotions completely out of the equation, and I'm just focusing on what is the market telling me, what is price telling me, where does the market want to go, and that's it. And then I'm recording all my observations here. I'm tracking these statistics. So I simply record the time I discovered it, the time it took to deliver to my objective or stop me out, the speed, how long did it take to begin moving in my favor, or how long did it take to move against me, the distance it moved in my favor, and the distance it moved against me. So today, I actually found some solid observations. And today's my second day of studying price action live for the first time ever. Yesterday was my first time ever watching the market live after studying ICT for 2 months. Today was the second day. And today I got two observations correct. So two hypothetical trades out of three. So I had one wrong observation and two right. So it's not bad for my second day. I'm actually pretty proud of myself. I've just been studying my ass off this entire time for the last 2 months, and nothing has really clicked until I started the 2024 mentorship. I felt completely clueless before then, but ICT literally just laid out a step-by-step process, and I'm following every single step of it. And a lot of things are clicking, and they're clicking very, very fast. You only started the mentorship about 2 weeks ago. So it's going good. Just following the process, submitting to the process, taking the time element out of it. I don't care how long it's going to take me to become profitable because I know I am, and I know that when I am profitable, I'm going to be widely successful. And I'm at the point in my trading journey where I feel like I'm maturing because when I was trading last summer, everything that I was doing was I was making an effort to come to the market and try to pull profit out of it every single day. That's what I was doing last summer. That's all I was focused on. I was only focused on how can I come to the market today and make money. I didn't have a process. I didn't have a model. I didn't have rules in place. There was nothing systematic about it. And it's basically just guessing. And that's how last summer went. But this summer, I have a process that I follow every single day. And that's all I've been doing. And the results are showing on day 2 of me studying price action live. So I'm going to go over the observations that I made note of. I always struggle putting my words together at this time of the day because I've been working for over 12 hours, 13 hours at this point. So brain's kind of fried towards the end of the day. But this is what I do to end my day because I enjoy doing this. So the first observation that I made note of was at 7:39 a.m. So I start watching price action at the start of the morning session, which is 7 a.m. It's this first line that we see right here. So starting at 7 a.m., I'm looking where is the market smooth and where is it jagged? Because where the market is smooth, that's where it's going to go. Where it's jagged, that's where it's going to move away from. So the trade model that ICT laid out is said that after 7 a.m. is when you start looking for where's the market smooth. But today I was referring to price action before 7 a.m. and I use that for a potential long scenario right here that did not play out at all. So he says you're supposed to let 7 a.m. pass and then start the hunt for where's price smooth. But I was referring to price action before then, so not necessarily following the model that he's laid out. But I did see this run on relative equal lows down here, and I saw this, right? We took the smooth area price, we made it jagged, so we can physically see the damage done. The sell stops underneath these equal lows are taken. They are ran out of the marketplace. As we see these aggressive down close candles underneath these lows, and then I see meaningful displacement. We see a change in the state of delivery. We violate the open price of the consecutive series of down close candles. So that's a change in the state of delivery. The market is now entering a buy program, and now it will seek. Well, it's supposed to, but it didn't happen. It doesn't mean it's going to happen every time because there's other factors that go into it, such as what is the higher time frame doing, and I think that's why this hypothetical trade went wrong, because it was trading against the higher time frame narrative. And a big indication that this trade was not going to play out was how the market just chopped around and sat in this buy side imbalance right here. So when I see a change in the state of delivery and we violate the open price of this down close candle right here, I want to see the open price of this then be supported, right? I want to see it act as an order block. This is the most sensitive point of the bearish order block, the open price. So I'd want to see a nice reaction off of that. And I'd also want to see price stay, if it were to be strong and if it were to run the buy side liquidity above these highs, I would want to see the market stay in the upper quadrant of the buy side imbalance. That would indicate strength, but that's not what we did here. Instead, at first I originally saw price staying in the upper quadrant, so I was like, okay, that's good. That's a potential sign of strength. We began moving away from that. But then we run this short-term high right here, and we fall back into the buy-side imbalance, which is not what I would want to see at all. I'd want to see it touch the upper quadrant and then make an aggressive move with speed and magnitude towards the buy-side liquidity above these highs, but it never did that. So it just hung around, and that was an issue. That was why this did not play out at all. So hypothetically, I have my stop, I think, below this inverse fair value gap. So here was another confluence for the trade. We inversed a sell side imbalance as well. So this is my trade model right here. This is what I like to see. I like to see that breaker formation, a change in the state of delivery. We inverse a PD array on the left side of the curve, which in this case is a sell side imbalance, which is usually what I see. I see an imbalance violated and a change in the state of delivery and a breaker formation, and then I will look to get long on the buy side imbalance, if there is one right here, or the inverse fair value gap. So that was what I was looking for. Did not pan out, and a good indication that I wasn't going to pan out was it initially tested the upper quadrant, moved away, ran this high, and then dropped back into it, and then just kind of hung out and meandered around. Didn't really go anywhere. Didn't provide any reaction off of the inverse fair value gap or the buy side imbalance. And then once the buy side imbalance is violated, obviously the trade did not pan out and I got stopped for a hypothetical loss of time distance against me. Hypothetical stop of 5 handles. So there you go. But what this is doing right now is just creating more smooth areas of price, right? And then eventually 930 open comes along and we just absolutely run over all this low resistance liquidity. So this is where, all this action right here sets up the bias for what the 930 open is going to do. And I actually made some good observations there. But yeah, this was wrong. And I'm okay with being wrong. But I'm not even placing any trades, and I can feel that I am somewhat bothered by being wrong, which is obviously not a good thing, because as traders we have to be okay with losing, obviously. But it's hard to do that, obviously. Well, actually, I'm not going to label it as hard, because if I label it as hard, then it's going to be hard. But if I say it's not hard, then it's not hard. That's how the mind works. It's not hard. So I felt myself kind of bothered that I was wrong on the setup. And I'm aware of that feeling, and I'm telling myself, like, I have to be wrong. I'm wrong. Okay, good. Now I can understand what indicated that it wasn't going to play out, which I did. I went back and reviewed it, journaled it, recorded everything. And I know why this trade did not play out at all. Because this It should have propelled price higher to go run the buy side liquidity above these highs, but it didn't. We fell back into the range, and then we just kind of meandered around. And look at the difference between the up close candles and the down close candles. We see these down close candles are large, they're bulky, they're bold, and then compare that to the up close candles. It's the exact opposite. They're small, they're meaningless, and they don't really give you much information. And then price was just trading sideways, and then eventually stops triggered, right? So if you're trading the 7 a.m. range, I think your best bet is to simply wait for the relative equal highs and lows to form. And another reason why this did not pan out was because what time was that? 7:30 something. I think at this point in time I was fading the higher time frame order flow, and there was no meaningful run on liquidity. What do I mean by that? Well, what initiates this entire price run right here is a run on the London low, right? And also the low from yesterday's session, lows from yesterday's PM session. And that's what started this move. But these are kind of just random 6 o'clock lows, not really a major pool of liquidity. And these major pools of liquidity are what set up these massive runs. Like here, what initiated this entire run was ES taking out the London high, and because ES took it out and NQ didn't, it's a cracking correlation, SMT divergence, and that's why I wouldn't expect NQ to take this high. And then we see this dump from here. So it's always, the big moves of the day always come at important levels of liquidity, and this is not necessarily an important level of liquidity. It's nothing really significant. And then at the time, see, it's like if you can't see it on the 15-minute, then it's probably not going to be anything meaningful down to the 1 minute. And it wasn't. I think it was maybe just this low, and that's it. And this was just a tiny little retracement, and then we just rolled over top of that. So that is why that observation was incorrect, but I made two more that were decently solid. Maybe a little bit of luck involved, maybe not. But I'm decently proud of myself for what I did today. Considering it's my second day doing this, I'm definitely seeing a lot of progress, which is encouraging for sure, because I'm not even placing any live trades, and I'm totally okay with it. And that's why I think I've reached a whole new level of maturity in my trading, because I can just come to the market, not even place any trades, and be totally okay with that. And that's awesome. That's something that I would never have done last summer, because last summer I came to the market wanting to make money every single day. And because I did that, I didn't make money. It's funny how that works, huh? Very funny how that works. Very ironic. Anyways, this is my second observation. So actually I did catch this short in real time as it was happening. But the logic and narrative behind it, I'm not sure if it was the best. But essentially, this is what I was thinking. So I actually forecasted pretty much every single significant price move up and down today. So throughout the entire morning session before that 9:30 opening, I was reading the order flow and I was journaling this. I was literally journaling every little fluctuation of price, just reading the tape the entire time. And throughout all of this, I read the order flow as bearish, and it remained heavy. It remained bearish. So the first thing that I wrote down when I came to the screens was the order flow is bearish. I saw these clear, smooth lows, so I thought this was my draw liquidity. Below that, we have this breakaway gap that could potentially get disrupted. So I was looking for a run on these relative equal lows to then tap into this buy side imbalance and then trade higher to then run out these smooth highs over here. And that was what I was looking for. That's the first thing that I wrote down when I came to the market today. And that happened, which is just beyond me. I mean, trading how I used to trade, you can't do this with what I used to do. You can't forecast price swings with how I used to trade. I used to look at a heat map and in a depth of market and all that. It's just shit you don't need. Yeah, you can make money using it, but I would much rather know what the market's going to do before it does it. And that's just crazy. Like, I forecasted this entire move. I saw these smooth lows, the market, and up here was jagged, right? These highs aren't smooth. So up here is jagged, down here is smooth. Market's going to attack where it's smooth, run those stops. There's a breakaway gap here that has yet to be rebalanced. We could potentially tap into that. Then once it taps into that, I want to study, does it remain in the upper quadrant? Does it respect consequent encroachment? If it does, that's a sign of strength, and we can see price trade higher and run all of this buy side liquidity. And that's what happens. So I think the biggest lesson that I took away from today is that I have to trust going short as the market is going higher. Before 2024 mentorship, I really struggled to think in terms of power of three. Now that ICT has gone over it a couple times, I make it a mission of mine to come to the market anticipating that Judas swing, anticipating that fake move that is opposite to the real move of the day, which occurred perfectly from 9:30 to 10 here, and it ran out all these smooth highs. So I was seeing this sell scenario develop in real time, but I was doubting wanting to short the market here because of this. I saw this move, and I thought maybe I can wait for a retracement back into this price leg and then look to go long. But really, this was a fake move. This entire thing right here was a fake move. So I have to learn to trust that the initial move of the day is most likely going to be fake. And this was just a run on all the shorts that I've been profiting before the 9:30 open. That's all it was doing. And it took this smooth area of price and it made it jagged. So now what's price going to do after that? It's going to seek the next area of price where it's smooth, because that's where the stops are resting. So we ran out all of the buy stops resting above these smooth highs, all of it, in one swift, easy move. There's a low resistance liquidity run. And then I see a picture perfect sell scenario. Everything that I need to see. I see a breaker formation, a change in the state of delivery. We violate this buy side imbalance. We violate this buy side imbalance. We have an order block. We have a large meaningful displacement that leaves a sell side imbalance. And so price comes in, hammers the open price of the order block, respects the consequent encroachment of the sell side imbalance, respects consequent encroachment of the inverse fair value gap, and then price dumps. And we also have an ST that gives me confidence that the market is turning there, but I saw that after the fact. I didn't observe that in real time. But I was doubting, looking for a sell scenario here because of this entire move that I saw up, but it was fake. That wasn't even the real move of the day, which is fucking crazy. So I have to learn to trust that usually there's a fake move that starts off every price run, right? If you're thinking in terms of daily power 3, initially there is usually a fake run, the Judas swing, to trip traders short on the wrong side of the market, and that's exactly what this does, right? We see this large sell-off here. So you got the bell, retail's wanting to get short. Everybody who's short before the bell just gets wiped out completely. All the way trades all the way back up near the London high. ES runs it, NQ doesn't, cracking correlation. And I see a perfect sell scenario. Everything that I need to see. And take it short on, I use the lowest threshold entry, which would be the low of the sell side imbalance with a stop above the candle 2 high, right? So right here. So my stop was 18 handles, 18.25 handles, and I was targeting these relative equal lows inside of the new day opening gap. And the new day opening gap was lacking sell side delivery. The new day opening gap is created. Oh shit, did I get it wrong? Where's the opening price? Might have been down here. I think I was using the wrong levels the entire session. I had it here. I don't know why I had it here. But this is where we opened at 9:30, so that would be the low end of the new day opening gap. So we close at 4:15 the previous day here. And then we open at 9:30 the following day here. If we trade up through it, there's no sell side delivery inside the new day opening gap. We only have buy side, right? Only buy side is offered through here. So the market's going to want to rebalance that, and it does, right? So I was targeting these relative equal lows resting just inside the high of that new day opening gap. So that would be my first partial. And then below that, I have these relative equal lows right before the 9:30 open. And both of them get attacked. So it was basically the whole logic behind this observation was this area of price was smooth. It was made jagged. I looked on a higher time frame. I saw that we had this inverse fair value gap, this sell side imbalance, and this premium wick that were all being respected. And there's a cracking correlation, which I saw after the fact, not in the moment. So I was rejecting these higher time frame PD arrays where they all were converging in one area. So that was definitely an area of interest, although I probably would have rather seen price take out the London high, but it didn't do that. And then it showed me this perfect sell scenario. So initially, in my retail mind, my old retail mind that I've got to get rid of, I've got to shift my paradigm to anticipate that the move at 9:30 is usually opposite of what the real move of the day is. So we have this 100 handle run that is not even the real move of the day, which you could have made some profit here as well. But this is what I was interested in because of what I was seeing, because all this was made jagged. And then I just saw a textbook sell scenario. This is exactly what I look for, everything that I look for. And I was targeting these relative equal lows and these relative equal lows, and both of them delivered. And if I use my target projection, I like to use the price leg that's kind of like a slingshot that kind of winds up before price distributes, right? So it'd be from this low to this high. Project that down, and I'd want to line up -1, -1.5 with some PD array, which we have sell side liquidity here. So this could be a partial, and then -2 to -2.5, where I can expect a smart money reversal. This would be my full target. Lines up with the new week opening gap high, and price beautifully respects that right here. And this is where I see another scenario, long scenario, which I'll go over in just a second. But yeah, that was that observation. I'll look at ES. Look at ES real quick. That's not ES. This is ES. So yeah, there's this SMT divergence. Clear cracking correlation. We see ES running out the London high. NQ does not. So I don't expect NQ to deliver to this high because ES is. One asset's going to reach that higher time frame point of interest, the other isn't. And that creates an SMT, and that's going to start the transition from the buy side of the curve to the sell side of the curve. So that's something that I learned before I started the 2024 mentorship. That's something that I observed in price action just from watching other YouTubers and back testing it myself. But that played out today perfectly. And that was a huge run from high to low. Almost a 200 handle run that produced. And what gave me confidence that the market was turning down here, and this is my third observation of the day, was that we reached that -2, -2.5 standard deviation where I can expect a smart money reversal. And it happened. And I saw the same exact thing that I saw here, but to the long side, just inversed. So I have a low, a high, a lower low, and a higher high with meaningful displacement. We reach a key point of interest. This reaction is beautiful. Yes, it is. We reach a key point of interest, which was the new week opening gap high, and look how that is respected. I mean, you can't get any better than that. That's precision. So it's beautiful. So, up close candle, down close candle, meaningful displacement, change in the state of delivery, order block, open price is the most sensitive point of the order block. Extended out in time, it's respected. It never gets violated. Until it delivers to the objective, which I was targeting these smooth highs right here. Until it reaches that objective, it is not violated. And then once we do run these smooth highs, we tap back into the new day opening gap high. We trade into this imbalance and this balanced price range. That is when we see the order block violated, change in the state of delivery, all that. But this is everything that I need to see, just on the opposite side of the market. And so the whole logic behind this trade was we are showing willingness to react off the new week opening gap high. I see meaningful displacement. I have a market structure shift, a change in the state of delivery, a bullish order block, a breaker block, a buy side imbalance, an inverse fair value gap. What else do I need to see? That's everything. So when I have all these factors converging together, that is when I see my setups. And it's also occurring at -2, -2.5 standard deviation, where I can expect a smart money reversal. And I got a smart money reversal. And so if I go to a higher time frame, we ran out these relative equal lows. And if I go to a 15-minute chart, we ran out these relative equal lows, and we also traded into this buy side imbalance. And we also tapped the new week opening gap high. So we have a run on liquidity. We're trading to a key point of interest. We're at an area of price where I can expect a smart money reversal. And price is just giving me everything that I need to see. So these smooth lows down here were made jagged, right? So the damage is done. You can physically see the damage in the chart. And now price will seek opposing liquidity. It's really that easy. Where's price smooth? It's jagged down here, so it's going to move away from that. Where is it smooth? Because it's going to go there, right here. And this is also -1.5, -1 standard deviation. Line that up with the PD array. I got these smooth highs here, and it delivers. Not only that, but there's a new day opening gap above the relative equal highs. So that supercharges this draw on liquidity up here. That gives a huge reason for the market to want to draw up here. I will not lie, though, while I was recording this observation, I left because I thought it wasn't going to play out, because we did this. We ran this high, formed a high, ran that high, and then I saw these large down close candles coming back, returning to the inverse fair value gap. And I didn't like that. And at this point, I just walked away and went and ate lunch. And then I came back and saw that it actually did end up playing out. So that's something else I got to work on. I got to work on knowing when my trade idea is still valid. Because, I mean, I guess it was here. This is just knocking on heaven's door, right? Every time we trade up to this high and we turn away, that is just making retail trust this idea, trust this area that it is resistance even more. And then we engineer more buy side liquidity, and then we just run it out in one swift, clean move, take out these smooth highs, tap the new day opening gap high, and then we trade lower. So that was that price move as well, and that delivered for hypothetical entry on the sell side, the buy side imbalance, and I said I was going to target this high, so that delivered for 73 handles in, let's see, in 1 hour and 1 minute. So this trade went into the lunch hour macro, and if you think about it, what does the lunch hour macro do? It retraces on what is in motion. So going into the lunch hour, who is profitable? The shorts, right? We have this prolonged move right here for almost 200 handles. So going into the lunch hour, who's making money? The shorts. So what is the lunch macro going to do? It's going to retrace on those trailed stops and take them out, which, if you're short, you would probably trust this area as a tough area of support or resistance, right? Because we have a double top, so that's strong resistance, right? So the algorithm's going to go seek the buy side liquidity resting above those highs, and that's how this played out. So a pretty decent sell scenario, or buy scenario. So overall in the day, I was hypothetically up. Let's just do low threshold. That's 50 handles, and this is 70 handles. So just call it 120 handles, hypothetically, minus the loss of this, which I think was 5 handles. So let's call it 115 handles of hypothetical profit on the day, which is not bad for my second day of making observations. Although, had I been demo trading, would I have actually placed these trades? I don't know, and that's why I'm not demo trading right now, because I'm building confidence in this trade model, and I'm studying price action, understanding it, understanding how the market moves, trusting that the move of 9:30 is not the real move of the day. And I'm going to fucking kill it. I'm going to fucking kill it. It's exciting. My progression is actually exciting because I've excelled at such a rapid pace in these past 2 weeks, ever since ICT started the 2024 mentorship. I finally know what I'm looking for. So it's very exciting. I'm not even placing any live trades, and I'm having fun, and I'm having a great time. And I love coming to the market and journaling every little fluctuation of price and forecasting moves and recording observations, and it's great. So that's going to be it for this video, and I'll come back tomorrow and Thursday and Friday and do the same damn thing. So this is going to be a part of my routine now. Hope you enjoyed. See you next time.